you have a great September. We come into October. We say, okay, September is traditionally a bad month. We, exercise that one. We had a good one. Now we've come into October. You've had some, bad history around that month in the past. Now we're upset a bit. And a trade that we've expected to keep working, like value over growth, we're questioning that too. So what is an investor to do?
I think this is where I always default to my long-term perspective, which is if I'm a long-term investor, I am certainly not reacting to, at this point, a day and a half of pretty jarring market moves, that being yesterday and today. I'm looking at my portfolio and I'm figuring out, I step back, I look at each company. Is this company executing well? Is the management behaving as I expected? Are the cash flows there? Are they going to return what I want? And if that's true for every company, then I stick with my portfolio and I kind of take a pause and I don't freak out over a down 500.
But is there a point where you start to say, it's time for me to get my portfolio ready for a recession? Winter time is coming, and I need to do what I need to do.
This depends on how the portfolio is. So in my case, I have an income-generating portfolio that pumps out that income whether we're in recession or whether we're not, right? And I don't make those changes. And
what's your best stock right now?
What's the best performing stock of the year is
in your book
is Western Digital. Right, which I got to buy in January at $37, trading at like 8 times with $7 of expected earnings. It's crazy, but it's weird things that you don't expect. Last December,
that's not crazy. I mean, that's a commodity stock. That's not crazy.
It's crazy when it gets beaten down from 102 at the beginning of 2018 to 37 at the end of 2018.
And the fundamentals, have the fundamentals appreciated in line with the increase in the stock price? No.
The pendulum swung too far on both sides, and it always does. So my whole portfolio is a little recession agnostic. I think that's where it's like, are you a long-term investor or are you a trader? And I think at that point you make those decisions.
Jenny, I'm with you on this. And I said this yesterday, that I follow the companies that are increasing share buybacks, increasing dividends. I'm 100% with you. And I think you'll agree with me. The problem with that is that does tend to lead you to the value area. I heard you say earlier your forward multiple is 13.5. I mean, that sounds a lot like my portfolio. And the problem is it's just difficult to get through a slowing global economy, whether it's China, whether it's the U.S., the European area. I'm with you. I'm not changing.
Yeah.
I'm fully invested. But, boy, it does feel,
I just want to give you one of the 2 a decade investment pieces of advice that I ever give, which is this. I think that the dawn of a recession or a slowdown is too late to be preparing for the dawn of a recession.
I agree.
That's why I'm watching now my little portfolio I got. I'm watching the bond part do better.
Well, that's why.
Right? That's what it's there for.
That's the same sort of philosophy that a Mike Wilson would project to you if he were sitting on the set in which he said on numerous occasions. The time to make the move is not now. It was before.
But you look, again, this is way out of my area of expertise, but I don't want to have to worry about my portfolio every day personally. So I make it so that if we go up or down, I'm okay. I mean, maybe I do a little bit more in stocks, a little bit less in stocks, whatever. But in general, I got the 60-40 or so split, whatever the heck it's supposed to be. And that's what I do. And I sort of set it and forget it. It's like wrong.
Let me give you some other ideas. So Jenny had Western Dig. It's been a great performer. And we can get some other ideas from all of you as well. Bank of America has their top 10 ideas for the fourth quarter. I'm not going to read all the list, but Salesforce, Disney, Raytheon, Target, I don't know who owns like a name like Aramark or Dover or New York Community Bank, but those are the buys.
So New York Community Bank is one of the companies that I've been researching, and it's kind of topically, it looks like a complete dog when you look at it, right? I mean, it does at first. And then when you dig down into it, oh, by the way, and they have all this sensitivity to like changing leases in New York City and changing rental rates and a ton of political exposure. But you dig down into it and you see how incredibly solid and consistent the cash flows are. And you can look back to 08, 09, and you can see that they could sustain the dividend and sustain the cash flows even in this environment. So that's the kind of stock that I'm looking for. I'm looking for that as protection more than a 40% bond exposure.
Where do we go?